A profound and deeply concerning trade war has erupted between the United States and Canada, two nations traditionally viewed as the closest of allies, shaking the foundations of one of the world's most intricate and robust economic partnerships. This unprecedented conflict, triggered by President Donald Trump's imposition of substantial tariffs on Canadian steel, aluminum, and a wide array of other goods, has sent shockwaves through both economies and reverberated across the global trade landscape. In response, Canada has launched a series of retaliatory measures, including a 25% tariff on a staggering $155 billion worth of American products, signaling a willingness to engage in a prolonged and potentially damaging economic confrontation. Canadian Finance Minister, addressing a concerned nation, outlined the severity of the situation with stark clarity, making it abundantly clear that further tariffs, potentially totaling an additional $125 billion, would be implemented if the United States does not swiftly reverse its current course of action. This dramatic escalation has plunged major American industries, particularly the automotive and energy sectors, into a state of heightened uncertainty and potential market disruption, threatening the profitability and long-term viability of prominent brands like Tesla, Ford, and GMC, which heavily rely on integrated North American supply chains. The root cause of this conflict lies in the Trump administration's claims of national security concerns, citing the need to stem the flow of illegal immigration and banned substances as justification for the initial tariffs. However, many analysts, economists, and international observers view these claims with skepticism, suggesting they may serve as a thinly veiled pretext for deeper economic motives and a broader strategy to reshape trade relationships in favor of the United States. Canada's initial response to the U.S. tariffs was swift and decisive, including the imposition of tariffs on $30 billion worth of American goods. This first wave of retaliatory measures targeted a wide array of consumer products, encompassing everything from orange juice and peanut butter to wine, spirits, and electronic devices, demonstrating Canada's willingness to inflict economic pain on American consumers and businesses. The second wave of tariffs, if implemented, would target critical sectors of the American economy, including steel, aluminum, and the automotive industry, potentially inflicting significant economic damage and disrupting vital supply chains. Canadian Prime Minister Mark Carney has adopted a firm and unyielding stance, signaling no rush to engage in negotiations with the United States. He has emphasized Canada's strength and determination to protect its national interests, indicating a willingness to endure economic hardship and prolonged trade tensions in pursuit of a fair and equitable resolution. This assertive approach includes the potential use of energy supply cuts from the province of Ontario, a major supplier of electricity to the United States, a move that has drawn strong warnings and condemnation from the White House, further escalating tensions and raising concerns about regional energy security. The economic consequences of this trade war are already being felt on both sides of the border. The Canadian dollar has depreciated significantly, and the Canadian stock market has experienced substantial losses, reflecting investor anxiety and uncertainty. The Bank of Canada has issued stark warnings of a potential 3% contraction in the Canadian economy if the trade war intensifies, highlighting the severe economic risks associated with this protracted conflict. In parallel with its retaliatory measures, Canada is actively pursuing a strategic diversification of its trade relationships, particularly in the rapidly growing Asia-Pacific region. This strategy involves strengthening existing trade agreements, such as the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, CPTPP, and forging new partnerships with key economies in the region, aiming to reduce Canada's long-term dependence on the U.S. market and mitigate the impact of future trade disruptions. The future of U.S.-Canada trade relations now hinges on the ability of both nations to find common ground and reach a mutually acceptable resolution that addresses the legitimate concerns of both sides. The current tariffs threaten to disrupt long-standing and deeply integrated supply chains, increase consumer prices, and undermine the economic stability of both countries, potentially leading to job losses, reduced competitiveness, and long-term economic damage. Canada's retaliatory measures, coupled with its strategic shift towards domestic production and alternative markets, pose significant challenges for American businesses, potentially leading to a decline in exports and a loss of market share. The critical question remains: will the United States back down in response to Canada's assertive stance? Or will this trade war lead to a prolonged period of economic divergence and inflict lasting damage on the long-term economic prospects of both nations? Share your thoughts and insights in the comments below, and don't forget to like, subscribe, and share this video to stay informed about the unfolding trade conflict between two of the world's closest economic partners.